Here's an interesting number. Last month in August,
Yes, tell me.
new build sales increased by 28.8%.
Because there's not enough inventory.
Right. And I'm also hearing a lot from a lot of realtors about how new builds are opening up because they have had a lot of issues.
What do you mean?
Meaning, so before they would only offer realtors 1% comp.
Right.
And now they're upping it to 5% comps.
5%?
Yes.
So they get both sides of it?
Yes. Meaning I think new builds have been stuck holding on to it, developers, and I think they are in a point where they want to sell. Now, granted, I mean, that's not everyone. It's regionally based.
Are you talking about here in the Carolinas?
But I just think it's interesting. That's nationwide. That's what I mean.
Nationwide. Okay.
So it's regionally based.
Regionally based.
But I think a lot of new builders have lowered prices and have opened
Not
up
here,
to realtors. Not here. I mean, I have been hearing for some realtors in the Carolinas that they're reaching out to them, offering them more percent comp.
I also think that they ran into an issue where interest rates went up and
Yep.
they were priced too high, and it priced a lot of their market out.
That's true.
So when interest rates go up like this, I mean,
Well-
payments can increase by $300-$400.
We've had
more.
clients ended up coming to us because the lender they worked for had them qualified, and interest rates got them to a point where they didn't qualify.
Right, and just so happened to be the builder's lender.
Right. And we had to step in and make it work.
And we did,
We did.
because we're better priced.
We did.
Better priced and better service. Weird.
Yeah.
Why wouldn't you work with
We got them
us?
a better rate with lower closing costs.
Crazy.
Imagine that.
Weird. Never seen that happen before.
So I don't know if this new build thing is going to be a trend, though, or not.
What size builders? It won't be a trend if they. It'll be a trend with private builders who build 75 to 100 homes, who don't have a lending company that they own, but those big ones that build those massive neighborhoods.
Yeah.
It will not be a trend for them because they're going to push everything to their lenders. Well, actually, they're going to realtors, so maybe it will be a trend. I don't know, Ben. How am I supposed to know? I can't predict the future.
I don't know. I think it's just an interesting
Where'd you read that?
point. Mortgage News Daily.
Mortgage News Daily? Nice. Every time I click on it, they ask me for money.
Well, you're clicking the wrong buttons. Oh, God.
You also have to be careful what you're reading.
Yeah.
Because some of it's very skewed. Like that's why I only get certain sources that I get stuff from. I mean, I look at all of it, but some of the stuff I read, I'm like, oh, that's not right.
Well, it's taken out of context.
That's what I mean.
Yeah.
And plus, the people writing those, do they actually even work in the mortgage industry? Or are they journalists? Are they big J journalists or little J journalists? That's the question I have.
I mean, I think they're smaller, which I think is usually probably more reliable.
Sometimes.
So,
Maybe.
Yeah. But that kind of leads us to our next topic too. So the current media coverage and of the markets and the housing market in particular.
This is why, yeah. What about it?
I just think it's interesting. So because you hear so much doom and gloom going on, it's not that bad. Yes, interest rates are high. It affects affordability. You're paying a lot more for your payment right now. But guess what, people? It's coming back down in a couple years. This is not going to last forever. It's a short-term solution, and people still need homes, and people are still going to buy homes.
So the media coverage made me ask, are they doing it on purpose?
Yeah.
That's what made me start questioning the fact, because it's just too. But then you think about it, and it's like the whole fear sells. If it bleeds, it leads. I'll tell you this. If you're not buying a house because of the interest rate right now, you're not very smart.
Right.
No offense to all you stupid people.
Right.
Now, here's the deal. I got to put some context to this. I'm not calling all of y'all not buying houses right now stupid. What I'm saying is, if you are looking for your home and you find your forever home and you fall in love with it and you want to be there and you don't purchase that home because of an interest rate, a short-term interest rate where the average American stays in for 4 years or less in their mortgage. Did you know that? The average American only stays in a mortgage for 4 years.
I did.
How'd you know that?
Huh?
How did you know that?
Because I've just
You just seen it, read it. Okay, whatever.
right.
I thought I maybe told you, but long
I
story
don't know, maybe
short,
so. I don't know. I've
if
just always heard that.
you don't buy your house because of that, because of some short-term payment, let me tell you something. We have a inventory shortage. Appreciation's going up. At the same time, you'd be paying down principal. I can do a rent versus buy
100%.
comparison for you to show you how dumb that decision will be over the next 5 years.
Okay.
And
Yep.
that appreciation is compounding. So you're losing out on appreciation along your way. And here's the other piece to it. I have a saying, and the saying is date the rate, marry the home.
That's a good saying.
I made it up.
That's a really good saying. But the other piece too to that, like you mentioned, home appreciation. But guess what? Also appreciating as that time goes on, rent prices.
Guess what else?
What?
Guess what else is happening right now? The reason the rates are so high.
What?
Inflation! So guess what that means? For every $100 that you have in the bank and not invested in real estate, you lose a buying power of 8.3% as it stands today. So next year at this time, that means your $100 will be able to buy $92 worth of goods. Now put that into a big transaction like a $400,000 mortgage. How much more buying power do you have because your $20,000 down payment? And that's just an example, folks. I don't know if that's the real number because I'm not a math guy. But Ben is, and he could probably do that on his calculator, but we won't do that. We don't want to bore you. But what I am saying is if you put your down payment into that, plus the appreciation, plus the money you're paying down on principal, that's a way better return on your investment than what? Rent. Because guess what happens with rent? It rises on average 5 to 6% per year.
Exactly.
And guess what? Then you multiply that by inflation, so you're keeping that money that you're quote-unquote saving in your bank account, and then you look at the opportunity cost that you lose out on because you're not gaining that appreciation, and you might as well just take a bucket full of $100 bills, throw some gasoline on it, and throw a match. But that would probably help with inflation because you're taking some money out of the supply. So how should we handle this situation?
But meanwhile, while the rent payments are going up, you are on a fixed payment that will only go down when you refinance.
Right.
Seems like an easy decision to me.
It's a very easy decision.
Now, I mean, it is mentioned. It does have to be said that it does affect affordability, and the house that you might have been able to buy before, you can't now.
Right.
So,
welcome to America, folks, where you have to earn your big old house. But we got lucky enough to buy our big old houses before the interest rates went up.
We lucked out. But there's also alternatives there, and that's why working with someone who knows what they're doing is so important. I mean, we were able to help someone the other day by, guess what? We were able to get them on lower interest rates by, instead of doing one jumbo loan, by moving them to another lender.
And doing a HELOC.
And then doing a HELOC on top of that.
Yeah, so we got them close to 5%.
Right.
On a big-ass loan amount.
Right. So guess what? We are saving them money because there are
That's a short-term Band-Aid, though.
It is, but we're talking about people who can refinance in a couple years or can do whatever.
Right.
Like
we saved them $2,000 a month in payment.
Exactly. You still have options out there. You still have flexibility. You still have, you can get on.
Talk to a mortgage professional is what he's saying.
You can. There's interest-only programs out there. Guess what does that do? Even with a higher interest rate, that keeps your payment lower for the next 1, 2, or 3 years. And then you can refinance out of it.
Right.
So you still have options.
There are a ton of options, and you can get creative. And if you work with somebody who's good, they can get your interest rate down. Like we got someone down 2% today.
Yeah, we did.